Today, we're diving into one of the most legendary experiments ever to happen on Wall Street. It all kicked off with a simple bet, a friendly argument that tried to answer a huge question, one that gets to the very heart of what talent really is.
So, here it is. Are great traders just born that way? Is it some kind of innate genius, a gift you either have or you don't? Or is it a skill, something that can actually be taught and mastered by pretty much anyone? Well, this exact question is what sparked a now famous bet between two absolute titans of the trading world.
All right, so on one side of the bet, you have Richard Dennis. This guy was a trading prodigy who famously turned just a few $1,000s into hundreds of millions. And he was absolutely convinced that trading was a teachable skill. But on the other side, you have his partner, the equally brilliant Bill Eckhardt. He was just as certain that trading was a natural gift, nature versus nurture. So what did they do? They made a wager and put millions of dollars of their own money on the line to see who was right.
To settle this bet once and for all, Dennis decided to run a real-world experiment. He put out ads in newspapers like the Wall Street Journal, looking for people to train. And get this, he wasn't just going to teach them his secrets, he was going to give them his own money to trade with. The whole project ended up with a pretty weird name, all thanks to a trip he took overseas. So while he was visiting a turtle farm in Singapore, Dennis had this kind of aha moment. He turned to Eckhart and said, "We're going to raise traders like they raise turtles." And just like that, the name stuck. His hand-picked group of total novices became known as the Turtles. The idea was actually pretty simple. If you create the perfect environment and give them the right instructions, can you grow ordinary people into world-class traders?
The response to the ad was just huge. Over 1,000 people applied, but Dennis only picked a handful. And the people he chose were, well, they weren't your typical Wall Street types. We're talking about a Dungeons and Dragons editor, an academic with a PhD, a professional blackjack player, and even a 19-year-old kid named Curtis Faith who had zero trading experience. See, Dennis was doing this on purpose. He was building a team that would prove his point. You don't need some fancy background to win at this game.
So what was the secret sauce? What on earth did Dennis teach this random group of people in just 2 weeks to turn them into elite traders? You're probably thinking it was some super complex secret formula, right? But the truth is, the foundation of their training was surprisingly simple, and it was actually borrowed from the world of professional gambling.
The entire system was built around this one core idea: positive expectation. Basically, it means that if your system has a statistical edge, you are guaranteed to make money over the long run, even if you lose a lot along the way. Think of it like a casino. The house doesn't know if you're going to win the next hand of blackjack, but it knows that over thousands and thousands of hands, its tiny mathematical edge means it will always come out on top. The turtles weren't being taught to predict the future, they were being taught to be the house.
And this whole philosophy really boiled down to 4 core principles. 1. Trade with an edge. That's your positive expectation system. 2. Manage your risk. You have to be able to survive the inevitable losing streaks so you can stay in the game. 3. Be consistent. This one's huge. You have to follow the rules every single time, no exceptions, or the edge means nothing. And 4, keep it simple. The goal was to catch the big, massive market trends. They knew that missing just one of those big winners could be the difference between an amazing year and a losing one.
Well, it didn't take long for these brand new principles to be put to a serious test. In fact, the Turtles' very first big trade became this powerful, unforgettable lesson. Not about markets, but about human psychology. Right after their 2-week training ended, the market for heating oil started to move. And I mean, it really started to move. The price just exploded upwards, so fast and so far that it literally went off the top of the physical paper charts they were using. They actually had to tape extra paper to the charts just to keep tracking it. For a bunch of brand new traders, this was the ultimate test of nerve. And this is where the story gets really fascinating. Remember, every single turtle had the exact same rules, but their results, they were all over the place. That 19-year-old kid, Curtis Faith, he just followed the system perfectly. He bought, he held on, and he banked a $78,000 profit during their practice period. But most of the other turtles, they panicked, they hesitated, they sold way too early, or they just didn't take the trade at all. They all had the same information, but fear and doubt completely took over. This quote from Curtis Faith just says it all. For him, the system was his safety net. He understood that the real risk wasn't losing money on that one trade. No, the real risk was abandoning the very system that was mathematically designed to make money in the long run. He had totally and completely bought in.
And that right there brings us to the real secret of the turtle experiment. After 4.5 years, the turtles had earned an average annual return of over 80%. Richard Dennis had won the bet. He proved great traders could be made. But here's the twist. The secret was never the trading rules themselves. The rules were just a tool. The real way of the turtle was about conquering the flaws of your own mind.
See, the whole system was basically a weapon designed to defeat our own cognitive demons. Things like loss aversion. You know, that feeling where losing $20 feels way worse than the pleasure of winning $20. That causes traders to cut their winners short and let their losers run. Or recency bias, where a couple of recent losses makes you afraid to follow your system, right before it's about to hit a massive home run. The rules were just a mechanical way to bypass all of those emotional, irrational human traps.
So, here's the big takeaway. It's this massive shift in mindset. A beginner trader is obsessed with being right on every single trade. Their ego is all tied up in it. But a turtle? A turtle doesn't care about being right on any one trade. In fact, they fully expect to be wrong a lot of the time. Their entire focus is on trading right, which means executing their system with discipline over and over, knowing that the math will eventually work in their favor.
So back to that original question. Are great traders born or made? Well, the turtle experiment gives us a pretty clear answer. They can absolutely be made. But it's not about learning some secret formula. It's about unlearning a lifetime of bad emotional habits and learning to trust a proven system more than you trust your own gut instincts. Good trading isn't about being right. It's about trading right. It's not about predicting the future. It's about mastering yourself.